Welcome to Chorus Call. Please hold for an operator.
Name and company name. Name and company name.
Bajaj Finance.
So what's your name?
Upendra Singh.
Sorry?
Upendra Singh.
Upendra
Singh.
Singh. And which company you're working in?
I'm in Indian Navy.
The conference is now being recorded.
5,000 crores. Of this, if I may, we've already taken 4,100 in the 3 quarters. And depending on how it plays out, the 4th quarter we may take the balance. Gross NPA and net NPA improved sequentially and of course year on year significantly, came in at 1.73 and 0.78. They are very close to being back to pre-COVID levels. We are very close and they are very close to where we've been historically for last 5-7 years prior to COVID. So came in at 1.73 and 0.78. The 0.16 RBI had changed the NPA classification requirement for NBFCs. There was no impact of the same on the on gross NPA and net NPA for us as a company. Overall stage 2 went down actually by 600 crores as you can see from the numbers. Overall stage 3 went down by 1,000 crores. So between stage 2 and stage 3 the numbers went down by 1,600 odd crores. Panel 7, I'm down to the last 2 panels quickly. Portfolio quality, rather than taking you through the 9 panels which are appended in the slides later, I thought I'll cover it in executive summary. From a management assurance standpoint, 7 portfolios are green. They are 2 portfolios are yellow. Actually, AF portfolio has actually moved from red to yellow. It used to be 86% current business. It is close to 83% current business now. All goes well, and despite the fact that portfolio has reduced by 4,000 odd crores in last 2 years. So it's a declining asset base on which there is improvement. I've stamped as management assurance the home loans as yellow because it came in at 99.1% versus 99.5% that it used to be historically for the last at a pre-COVID levels. Otherwise, I could easily argue even home loan is green. So 8 out of 9 are fundamentally green, and AF being yellow. Consolidated post-tax profit grew 85%, as I said, year-on-year not comparable, but 2,125 crores is the highest ever profit that we have generated in any quarter. Capital adequacy pretty strong, came in at 27%. Tier 1 itself is at 24.5%. As I said, in Q3, if you look at a long-term guidance metric that we've guided the street on, we've actually met all of them on a quarterly basis. So if pandemic becomes endemic, and given the state of portfolio that we are in, and with the business transformation going live, I would say I'm quite excited about the next fiscal. BHFL balance sheet, jumping to the subsidiaries, grew 39% to a tad below 50,000 crore at 49,203 crores. Capital adequacy was 19.5%. We would like to run that business at a 7 times, 7.5 times kind of leverage. As a result, the BFL board today, BHFL delivered a profit of 185 crores, PAT of 185 crores, a growth of 87%. BFL board today, as a result of 7.5 times to 8 times kind of leverage thought process that we have, has approved infusing 2,500 crores of capital in BHFL as a rights issue from BFL. BFSL acquired 65,000 new customers. Just to recall, we were acquiring 110,000 customers in BFSL in the previous quarter sequentially, which decided to focus on activation and quality rather than quantity. And the activation rates now, which used to be 20 to 23% in Q3, as a result are now looking at 43-44%. And that's the direction that we want to take. We do want to grow BFSL. BFSL came in at a PAT of 7 crores. The BFL board has also approved infusion of 400 crores of equity share capital as a rights issue in BFSL as well today. So overall, we have committed 2,900 crores of capital in today's board meeting into both the subsidiaries as a company. That's really on the financials. As I said, overall good quarter for the company. That's probably being polite. Minutes on is update on business transformation. I have 4 or 5 slides that I'll quickly cover. 2 of them are busy. I don't intend to cover them, but I'll just take you through very quickly on them. Just before that, various conversations, various people have various views on what we're creating, and so on and so forth. I thought I'd just simplify and clarify our stance on what we are doing this business transformation for. As a company, we have a very clear view that we are a consumer financial services business, diversified consumer financial services business. That's what we are. We believe that the purpose of any business transformation is a means to an end. It should, to the core business, result in stronger growth momentum, or superior customer experience, or better cross-sell, or should lower risk and improve operating efficiency. That's really the overall objective of any business transformation should be, and we are pursuing this whole agenda of business transformation singularly with that objective. I thought I'd just clarify my stand very clearly as management to make that point. All business transformation, it's also clear, I'm sure you know, you're all learned people, we've become learned over the last 18 months. We are very clear, it takes time, team and technology. We are increasingly super clear about that it needs all these 3. It's been 15 months. We started to provide quarterly update to the street, and since we started the phase 1 of business transformation, and I thought it would be an appropriate moment for me to share an update as to what's gone live and what's going to go live in phase 2. Due to wave 2, it got delayed by 3 months. It should have logically gone live in October. It went live in December. Phase 1 is now gone live with this staggered release methodology. Phase 1 had 3 sprints. Sprint 1 is now live for 100% of the customers. Sprint 2 and 3 together are live for now 10% of the customers. It will go live for 100% of the customers between 24th and 26th, and between 24th, 26th and 30th of the month, and we will sunset over a period of 15 days from there. The 15-30 days, depending on how many customers move, the older app infrastructure. But Kurush is looking at me. The point that he's making is we'll have to go by, if customer does not want to upgrade, as a customer we may not want to push a force upgrade. So that's a point well taken, Kurush, without you stating it. But that would be our intention, because we do believe new infrastructure brings significantly larger infrastructure and a much better customer experience for customers. Next 2 slides, I'll demystify the entire new digital platform, and the 2 slides from there on, I'll cover what we will do in phase 2. I think that's the purpose of this conversation. I'm not going to go through this panel. There are 2 panels on what I would call 15 components. The way you should read it is that on in this panel, the verticals read them as, the first column reads them as components at a design level, and rest of them you read as features. Overall, the new digital platform has 15 components. Just go to the next slide. And has 55 odd components, features, which is mentioned on this panel below. Overall 15 components and 55 features. Let's just go back for a moment. This is really all any of you as customer, or if you came in as a prospect, would experience. You would experience the entire payment stack that you see on top. You would experience 27,000 retailers through the no-cost EMI marketplace, which attracted 45 million visits in Q3 alone. So it's already a 250 million run rate asset. The insurance marketplace, which has gone live, has 9 insurance companies and 800 odd products. Investments marketplace, the entire mutual fund infrastructure through BSE Star sitting there. Health RX, which is for a customer, our proprietary health infrastructure, and BFSL app. These are proprietary app ecosystems. You would see lead journeys as what we call 3-in-1 financial services. You would experience earn and burn, earn for payment transactions, burn on convert to cash, bill payment and voucher. You would, if you press a button and said, call me back in any of the places, you would get a call anywhere between 5 and 15 minutes, depending on which of the 3,400 cities you press a button from. The productivity apps that are not visible to the customer, but that's really what integrates the integrated voice and marketing cloud infrastructure. You would see all these services, including calculators and profile updates and so on and so forth. You would see 31 app-in-apps across travel, entertainment, food, utility, shopping at this point in time. You would experience the featured search and content search as a customer, which we think is a hero frame because it's right on the home page. You would be able to see, as I said, NPS, social share, wish list, and so on and so forth. Personalization, nudges, notification. Data you will not see as a customer, but we would take consent from you. Depending on based on consent, it runs business rule engines. This platform is integrated with 400 plus digital APIs to make things happen. The next two are not really relevant for you, but without a very scalable core platform, it won't work. I mentioned in the past quarters, 3-4 quarters ago, that fundamentally restacking the core took the most amount of time, other than focusing on a good UI UX. Restacking the core is an important dimension to being able to deliver at scale what we intend to deliver. Also meant investing in core infrastructure like high availability infrastructure and much more deeper investment in disaster recovery, etc. What we've also done is what I've put is, because this is a functional construct, is 600 odd lateral and fresh hires we've got added to be able to deliver this over the last 15 odd months. This is really what you will see, as I said, between 24th and 26th of January, as Google allows us to transition 100% of the customers, and as we see stabilization of the platform. That's really all of you, either as prospect or new customer, would experience. Move. What we are focused on is what I would call phase 1. It was focused on creating a strong, stable and a scalable foundation for us to build the overall business transformation for the next few years. What phase 2 will fundamentally do is to focus on from existing customers to go to new Bajaj customer journeys, would introduce lot new features and functionalities, would augment current feature set and nuance journeys for our existing customers, taking them closer and closer to DIY. At the end of the day, that's really what we'll transition from processes to journeys is really where we are reorganizing our thought process and company over the last 15-18 months. And it's a journey, and we'll continue to stay there, going after journeys. What that would do, is what you see as the yellows is really what will come in over a period of 8 to 9 months. On this panel, I'm not going to spend time. On this panel, yellow, move. And the next panel, yellows. These are the new stacks and the features and components are not going to change, but the features are going to change. So we'll transition from 15 stacks and 55 odd features, 52 odd features to 15 stacks and 72 odd features and components. The only difference versus what we did phase 1 and phase 2 is that consumers will not have to wait for 8 months to experience the yellows that I talked to you about, because as I said, we are focused on building a stable and scalable infrastructure. As that gets delivered, every 3 months we'll release sprints. Actually, we'll release two months, but since we just started work on phase 2, this time around we will do it in 3 months. So this will get delivered over 4 sprints between July and October, November is really how we are looking at this frame to be. During this period, as I said, purpose of business transformation, this is a longer term frame. We continue to remain committed to deliver our long-term guidance matrix as a company. This is being created with a 5 to 7 year view. Let me simplify the conversation. This will help the company not on quarterly outcomes. This will help the company get closer and closer to customer. As I said, deliver the objective of business transformation, which is to either reduce costs, improve velocity, improve growth momentum, reduce risk, and improve customer experience. So that's really move. And it's not new, as you will see some of the expression here. As I said in the AGM, that our agenda is omnipresent. So physically, we continue to mobilize that. We are in 3,400 cities. Digital platform, phase 1 has gone live. 16.5 million customers currently sit on the old platform. 6 million now sit on the new platform. 500,000 new customers we acquired through EMI card in the third quarter alone. They are not just new customers. Of the 1.3 million SIF, they gave 240,000 loans. So we have a 30% conversion rate, which is a great number, I would say. In terms of activation, I already talked about 45 million EMI store visits. So as phase 1 goes live, these panels will get filled more and more. Is really how it already has 28,000 SKUs and 24,000 merchants. The point of sale transformation, which allows good customers to apply for a PL right at the point of sale. We have 600 crores of personal loans in Q3 alone and 91,500 credit cards. Payments, we have 5 million, just a tad below 5 million wallet now. A million wallet. We added 2.6 million wallets in Q3 alone. The P2M infrastructure, which you saw as yellow in phase 2, will go live in February. We are not waiting for that to happen in phase 2, and we are waiting for regulatory approvals to move ahead further on BBPOU and the team onboarding. As I showed, we already hired for the payments business 120 people, which will go to 400 people by June. So that's really the quarter gone by. That's really the business transformation update, and we are at it as management to chew gum while walking. That's the quarter. Happy to take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah, congratulations, Rajiv and the entire team. So firstly, with respect to this entire app, just want to assess the adoption. So how should we actually gauge the adoption? Maybe there are some metrics which you have highlighted in terms of people who were there on the consumer app and how many they have been onboarded onto the new app. So maybe 16.5 and 6. So in terms of maybe when you were making the remark, you said that many of them would not like to migrate and there will be no force upon them. So if you can highlight out of the total customer base, what is the final endeavor which we are looking at and by what time we would be seeing it? And as and when the new features get introduced, how do we convey to the customers, okay, that this is getting launched, this is what has happened? Because I think insurance and something was not available, it is coming through now, whatever comes on from 24 to 26. How do we keep on intimating to the customers and improve the adoption out there?
So 2 things, Kunal, from so there are 2-3 large engines that will drive adoption. You walk into the point of sale, your agreement is now on it. I mean, as on from 1st of February. So any new customer or existing customer comes on board, he has to go and do OTP and do an agreement there in the app. I mean, our entire ARU infrastructure is now driving this app, because at the end of the day, if I am trying to do activation and response units which do largest amount of communication with prospects and with existing customers. All of it is driving it towards the new digital platform. So adoption will be reasonably rapid. We are very and all channels in the company will go towards it. So that's first part of the conversation, because all journeys will get weaved in there. Whether it's a personal loan or it's a point of sale, the mobile receipt. If you're a defaulting customer, you want to see the receipt, you will instantly see it there. So wherever you'll touch us as a customer, the connect will be through the app as you move. All services, service touch points will be through the app. So service, collection, sales, all through the app. So that's one part of the conversation. Second part is, as phase 2 goes live, we think we are already beginning to track a set of internal metrics. We'll start to publish them for either, let's say, fourth quarter next year onwards. We are already tracking a set of what we would call 21 metrics that determine a effective app ecosystem. So just as it gets matured, we'll start to share that as well. So we are a transparent company, but it must reach a particular maturity before we feel comfortable starting to share the same. So wait for 3 more quarters.
Okay, sure. And overall, maybe in terms of the transition, so if I'm an existing customer, but there are no repeat transactions which are happening, but maybe through, say, collections or some other servicing, whichever is happening, any which ways I'll keep on migrating to the new app and at least will connect with it.
But it's an important conversation, Kunal, and if you go to the functional architecture that we've actually published, number 1, number 2, the conversation that we did with the community on taking on payments as a large frame, the first step you will see, we are very clear that the engagement would happen through that. That's why you see on top, just if you go there, on top you see UPI, BPI, EMI card, BBPS. BBPS is now already clocking 250,000 transactions in a month. 400,000 transactions, Purush is correcting me, in a month. So we will start to see, and we're just getting our feet wet. Let me just make that point very clear. We've been focused on, as I said, building a strong, stable and scalable foundation. And we have a large franchise, accelerating it, and we have a large profit pool. Accelerating it is not going to take too much effort.
Thank you. Mr. Shah, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Abhishek Murarka from HSBC. Please go ahead.
Hi, good evening, everyone. First of all, congratulations for the quarter. So 2 questions. The first is, on OPEX. So have you got a budget or what you will be actual intent in the app? And are you also seeing, you've hired about 600 people, you will be hiring another 800 as per your presentation. So are you seeing a lot of wage inflation there? And overall, how should we think about OPEX in terms of cost to income, given these 2 things in the background? So that's one. I'll come back to the second question.
We'll guide in case there is change. We do believe, as I said, we'll continue to chew gum while walking. We remain committed to deliver 33% kind of OPEX to NIM ratios that we were at pre-COVID levels. Over time, Abhishek, as velocity grows, as you become more efficient, as other the number will go down. Or could go down. I won't say will go down, could go down. Mm-hmm. But the 33% number or 32, 33, 34, I'm not fixated on the number. I'm fixating on the trend line that we remain committed to delivering profitability while investing in our future.
Great. So basically what you're saying is, despite all these efforts of investing in people and also through the app on cashback and all that, it's not going to skew the cost to income ratio from that level, 33 to 34, 35, whatever it is, low 30s.
No. Yes. when I said no.
And the other question I had is basically on the provision guidance. Now we've gone up to 48 to 50 billion, and you said you're trying to be conservative. But on the other side, you've also said that the impact of wave 3 is not really as much as wave 1, wave 2. So why have we really increased this guidance?
As I said, we remain in a uncertain zone. We don't want credit costs drag P&L, drag the overall momentum. Let me simplify the conversation. We like to run a fully costed P&L as a company, and that's really what we've done for the last 14, 15 years. And we want to remain conservative. As I said, this is management overlay. If it doesn't occur, which is for the first 17 days is looking like, and by June we don't have a fourth wave, this is available to be rolled back. Because let me in fact further complicate the conversation. The gross NPA, net NPA is back to pre-COVID levels. The stage 2, stage 3 assets adjusted for balance sheet are back to pre-COVID levels. So we are very comfortable on all these 4 metrics. But the uncertainty is what is causing us as management to take a conservative view. That's all.
Thank you. Mr. Murarka, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Shubhranshu Mishra from Systematics. Please go ahead.
Hi, Rajesh. Congratulations on the set of numbers. So, 2 questions. First is slightly complicated. You can define what is the age in average age income CIBIL score of the new to Bajaj customer. How many of them are 700 plus? The second is if you can also list out the concentration of the distribution reach on slide 47. We've given out the consumer durable digital product store, lifestyle retail stores. What are the top 1,000 or top 500 stores in each category catered to it, either in terms of volumes or value to the AUM? And last question is qualitative. When do we plan to become a bank or apply to become a bank?
So first is the TG. Fundamentally, look, at a design level, we focus on who we want to do business with in the EMI card space. So we target essentially those prospects that we intend to onboard as a customer. So that's level 1 point that I must make. Level 2, as a result, they have to be 700 plus or 720 plus, or they can be 0 minus 1. So that we're clear about it. Normally we see from a trend line standpoint, as I said, we acquire 492,000 customers in Q3. That means 160,000 customers in EMI card platform every month. 80-85% of the customers are 720 plus from a bureau standpoint, and between 12 and 15% could be 0 minus 1. But even those 0 minus 1 are ones that we want to target. So that's point number 2. TG remains between 32 to 45. That's really the TG that comes through the to be bureau tested. Naturally, in general, you're going to find that TG. And we find that TG, above 30 TG, is about building a long-term business. That's third question. Fourth, sorry.
Contribution by top 1,000.
Contribution by top 20% of the top 20 dealers would have 20% market share. That's not changed. It's also not changed because we've kept going deep. So if you take a top 20 city view, that number would be very different. But the moment you take a 3,423 cities view, the number has been at 20% now for a long, long time. Of course, the top 20 also kept going down. The top 20, some of them have got down to 1,500 kind of city. That's also not 1,500. They have 2,000 stores, so could be down to number would be 20%. It's reasonably distributed both geographically and from a concentration of retailer contribution. Bank, there's no plan. We'll definitely update before we decide. I think at this point in time there's no such plan, and that's up for RBI came out with their guidelines. It's up for the shareholders to decide, and we as management will follow what shareholders decide.
Sure. Thank you.
Thank you. The next question is from the line of Prakhar Agarwal from Edelweiss. Please go ahead.
Yeah, hi sir. Just three sets of questions. First, in terms of home loans, you highlighted that is yellow. What are the exact pressure points that you're seeing to highlight that technique particularly as a yellow? Second, when you talk about...
Have we lost you, Prakash? Prakash, right? Yellow. Prakash. Yeah, Prakash, sorry.
Yeah, so I was talking more from a home loan perspective. What makes you classify that as yellow, which is first? Second, in terms of customer acquisition, so you said that from a normalized level, it probably may go to 8 to 10 million over a period of time. What exactly is the architect that gives you increased levels in terms of higher customer acquisition rate? And lastly, in terms of when you make a point that competitive intensity in few of these operating segments has risen, where exactly have you seen this, which players have exactly seen this reason? And do you see that profitability in few of these segments also getting curtailed because of higher competition? Because bounce rate is what you said that has stagnated in January, or probably it's probably similar in December. So do you see pressure points in profitability in few of the segments wherein that is seeing higher competition?
So look, it's visible all over. You're able to get an auto loan at 7.5%. You're able to get home loan at 6.6%. GSEC is at 6.10. GSEC is at 6.6. Home loan is at 6.6. So that's competitive intensity for you. Personal loans are going at 10.5%, 11% for best customers. To my mind, personally, does not adjust for the pricing does not adjust for risk. To my mind, I mean now, and I could be wrong. And we are clear that there are, based on our PPM frames, there is a red line to where we can go on product from a pricing standpoint. So that's really the second response to the second point. It's all around us. Try and apply for a personal loan, you can get it at 11%. Salary personal loan. Professional doctors are getting money at 11%. So is not risk adjusted in my mind. Home loan, if you see, I've put up the panel 58. Logically should be 99.25 kind of number in my assessment, and that's why yellow. It's not a red in any given manner. It's just as you see the number to be here. To my mind, it should be 99.25 kind of number. As it gets there, we'll stamp it as green. Does not reflect a deteriorating credit situation given the nature of the business, but that's a management assurance assessment. Were these the two questions, Prakhar?
You said that 8 to 10 million is what you're targeting. So what is the underlying architect which you see that over a period of time you will be able to ramp that customer acquisition on a normalized level of 6 to 8 million?
I think as the digital platform becomes more and more robust, as the journeys become more and more integrated, you will see that happen. I would only just add one more dimension since we're pushing this conversation, is that this is only an app conversation. There's eventually even whether you came on app or on web, the experience should be same. If it should be same, not even similar. So as both the platforms are created, are optimized, deliver identical journeys. I'm quite excited and do believe that the momentum would be strong. That's what gives me that's our assessment as management.
So thanks a lot. Thanks a lot.
Thank you. The next question is from the line of Kuntal Shah from Oaklane Capital. Please go ahead.
Good evening, Rajiv, and thanks for the explanation and the commentary thereon. But just one request that this presentation was just released 5 minutes before the call, and I think that most of us would not have one time to it. And if the presentation were to refer to Kubernetes and data lake, I can assure you 99% of the people on this call wouldn't even understand it.
That's okay. I don't have a view on that. We are supposed to provide update, Kuntal. So our board meeting was finished at 5. It went on a little longer. As you can see, we just committed large capital. It is explanation to the board and to commit such large amounts of capital to the two subsidiaries.
That's the point.
You can imagine our state. We've been at it since morning, and we just at 7 o'clock also answering questions.
Maybe call next day help. Anyway, my two questions are: you mentioned there are going to be almost 600 plus APIs. APIs can enable even third party to offer solutions on your platform, provided you are not willing to or you don't want to. So are you planning to make it an open kind of a marketplace where they can also mutually benefit from your reach and your customer base, and you could do a revenue share with them? And I saw a marketplace of Bajaj two-wheeler. So it means you have moved beyond Bajaj ecosystem?
Yes. We'll be launching two-wheeler financing for non-captive customers by between 1st of June or 1st of July. In fact, we would have launched it if not for the marketplace. Let me make one important point that as we deliver phase 2 or any new large product, the whole approach to launching products, conceptualization to delivery, we would not do anything that is not available on day 0 to customers on the digital platform. So technically we could have gone live on 1st of February with a two-wheeler financing business. We've held it back for 5 months because we want SKUs across mechanical and electric to be visible and available to customers to be able to compare and shop. So that's one part. And two, as I said, on day 0, we would not launch without being on the digital platform. Your second question, Kuntal, was? API-ization of the stack. So the in-app programs are mostly APIs at level 1. Over time, as we see which piece is generating velocity, we will keep integrating tighter. You know, there's a lot of conversation that goes around saying people are building super apps. Super apps are not created. They get created because that's what consumer asks in search, and then you deepen journeys. At this point in time, you see 31 of them. They are all APIs, but they are level 1 APIs. They will get to level 2, level 3, and so on and so forth, wherever we see velocity. So 31 is going to 46 or 47, what have we said? 50. Sorry. So those are in-app programs are built as APIs, but let me caution, built as level 1 APIs. So they'll get to level 2, level 3. Answering your second order question, no view on exposing it to other than in-app programs. Our main focus in phase 2 is to make our customers' journeys easier and easier and easier, because that's really what generates. We are a diversified consumer financial services business, and that's really what generates the balance sheet and the profitability, and our entire focus is on that. I hope that answers the question.
No, just wanted to know the pros and cons of opening it for third-party applications which you are not present on or are not willing to be present on.
So there's no never say never, Kuntal, but don't have a view at this point in time. I think that's the. So if we think for travel and for shopping, our customers, or for things like casual gaming, customers are interested, they're already there. over time, we see on the search menu, customers are looking for another category. Based on data, we'll go out and build partnerships. Over time, we see in the existing in-app programs, clients are doing more activity. We will integrate tighter. That's how. That's our view.
Okay, thanks. I hope Elon Musk or Salman Khan is going to endorse Bajaj Coin, which you have laid out. I think you're going down that path. Thank you.
Thank you. The next question is from the line of Nitin Jain from Fair Connect. Please go ahead.
Hello?
Yes, Nitin.
Yeah, can you hear me? Yeah. So I just have one quick question. The speed at which company is acquiring fixed deposits, despite offering better rates than private banks, that seems to have decelerated over the past few quarters. Like from where we were growing 8 to 10% QOQ, we are down to low single digits. So any comment on that? That's all. Thank you.
No, it's a very fair question and it's a correct question. We've invested in 10, 11 channels over the last 4 or 5 years. And we told the team the time has come for you to demonstrate that the distribution heft has as much role to play as pricing. And that's really what we are testing for the last 6-8 months. We do see that, and we just increased pricing. We have internally pegged it as part of our ALCO processes to GSEC, that we kept pricing very tight, but the business still generates between 950 to 1,000 crores of retail deposits with average deposit of 3.5 lakhs a month. So we just, let me use the word, we're just maturing the business to so that's on one part. And the second dimension is that at the end of the day, retail liabilities is a cost center. There is a cost that we decide that we are willing to spend to diversify the balance sheet on the liability side, and they have to make ends meet in that. So these are the only two objectives, which is maturing the maturity of the distribution investments that you made, and two, running it in a disciplined manner within a particular cost base.
So just if I can add a follow-up, is our cost of acquisition of deposits, has it gone up recently, or how is it?
No, it's not gone up. It's actually gone down. But that's the pool that is available. So
Rajiv is referring to the overall cost of fund that it creates for the company.
No, I was referring to cost of acquisition.
Okay.
The third point that Sandeep is making is a correct point as well. That at the end of the day, there are users of this money who also ask in ALCO, what do I do with the money if it comes at this price? So eventually we have to find the rightful balance once the business reaches a particular point of maturity. So that's really the point that Sandeep made is equally important. Between these three, that's how you see, and your observation is correct, slowing down of the origination.
Thank you.
Thank you. The next question is from the line of Dhaval Gada from DSP Investment Managers. Please go ahead.
Hi Rajiv, congrats on good numbers and the additional disclosure. So I just had a couple of questions. First was on new loan origination. So the point is in terms of sales velocity of existing customer base, if you see the current traction, it seems to be similar to second half of last year, but still substantially lower than pre-COVID run rate. So the question is this number less relevant as the ticket size sort of increases, or it's important and that's something that we expect to normalize in FY23?
You mean loans booked, right, Dhaval? You mean loan booked?
The number of loans booked, yeah.
It's a correct observation. It's a correct point that versus the 6 million, the 7.4 looks good, but the point that you're making is correct. In December 19 quarter, we had booked 7.8 million. 7.67 million. 7.7 million to be precise. During that period, if you recall, post pandemic, we came to a conclusion and we disclosed that to the street. There are two lines of businesses that washed away last 3 years of profitability. One was the retail EMI spends business, and that used to do 200,000 accounts a month. We capped that at 60,000 accounts. So from a 600,000 accounts, we allowed them to do only, even in a festive season quarter like the previous one, we capped them at 200,000 accounts, 220,000 accounts. So that's 400,000 plus minus gone away. The second was that we used to do these wallet loans to our existing customers of 5 to 10,000 rupees for 3 months, so-called in the new jargon. Last April. So that's how the 600,000 number logically gets reconciled. 7.7 apple to apple is 8 million is how you should read it. Observation is correct. Is it important? Answer is yes. In new loans booked remain an important metric because it demonstrates engagement, demonstrates velocity. So it remains important, and we think as the economy comes back, as pandemic becomes endemic, given the franchise creation, given the deep distribution, given the new digital platforms that are getting created, we will see both happen: new customer acquisition and new loans booked. I'm waiting to see, hopefully, a normal summer. We've not seen a normal summer. Summer contributes to 40% of the business. We've not had a normal summer, which is April, May, June for last 2 years. So I hope that answers the question.
Well, just one sort of follow-up, small point is, in this period of December 19 to now, I mean, we've seen about 33% accretion on cross-sell customer base, 33%, 34% accretion on EMI base as well, EMI card base. So adjusted for the engagement ratios pre-COVID versus where we should be next year, broadly, should it be similar, even adjusting for the REMI loss and the wallet loan loss, it should be similar?
Yes, we will see increased velocity. Now it's a point of view. I can't say that as I mentioned earlier to the response, that as this whole business transformation gets delivered, as customers should see increased velocity and increased engagement, and that should lead to higher volumes.
And the second question, Rajiv, I had was on the digital EMI card. So if you look at the base now, I mean, it's almost like 5% of the EMI card base. If you look at the engagement metrics here, I mean, at least optically they look better than the the existing EMI franchise. So just, I mean, I wanted to understand the economics part of it. I mean, should this card be, much better break-even compared to, the normal origination? And also...
They are profitable in day one. They are profitable in day one.
They are profitable in day one. Understood. Understood. And some initial thoughts on the engagement part?
Out of this 492,000, 300,000 pay fees and become pay fees instantly and become and get an EMI card. And 192,000 as and when they decide to take the product, come and at that point in time pay. So that's how the breakup is. If you take a further, so 492 on aggregate is profitable on day one, adjusted for as a P&L.
Got it. Thanks. I'll come back. Thank you.
Thank you. Ladies and gentlemen, we will take the last question from the line of Aditya from Citigroup. Please go ahead.
Hi, thank you. If you could talk about two segments. So one, you mentioned affordable housing in the last quarter. So what's the profile of that business in terms of target yield, ticket size, and geography? And on IPO financing, which seems to be low, at least on quarter-end basis, is there a change in view on doing less of that, or could this be just a period and balance sheet phenomena?
So affordable housing has just gone live. BHFL has just started to they create a team. We are testing it into markets. We're building that business with a long-term view, very clearly. So that's very, very early days. Aditya, very premature to make any comment on that. It will probably be 18 months before we start to warm it up. Let me make a point. So that's one part of the conversation. Two, IPO financing, just quarter end, it had no outstanding, so that's one. Two, IPO financing is a phenomena will, as you're all would be all aware, would based on the new guidelines of 1 crore requirement, would probably cease to exist from 31st March on. So it seems as a market participant at this point in time. But we, to retail customers who want it, we would of course offer it. But retail customer was never participating that aggressively. But from a longer term standpoint, I could argue that it's a step in the right direction to retailize the market participation.
Got it. Thank you. And just secondly, is there on the LCR norms, what is the expected impact? And I mean, so what portion or what amount of liquidity in this quarter do we have we kept in rupee billion terms to comply with LCR norms?
Yeah. So we are carrying a large amount of liquidity otherwise also. So there is absolutely no impact that the company has from LCR perspective. The only change that was supposed to be done by us is that so far a large part of the investment was going in mutual fund versus mutual fund. Now it goes into some of the trade bills and so on and so forth. So that's the only change that has taken place. That also allows us to leverage. So trade bills can be used for raising more debt as well. So that's the thing that has changed. From an overall guidance